Hello, this is Seewing Yee from the Ulysses Network. All right, let's go over the 2018 the dynamic shift in the U.S. turnkey investing landscape. All right, let's go over the recap. In the U.S., there are 50 states. About 40 of the states are no longer attractive to invest. Think about that for a moment. Consequently, there are only a handful of states where you can get a positive cash flow. They are, but not necessarily in order, or as follows: New York, and I don't mean New York City, Pennsylvania, number three, Ohio, number four, Michigan, number five, Tennessee, number six, Indiana, number seven, Missouri, number eight, Illinois, and number nine, Florida, but not much longer in Florida, one more year. All right. Is this shocking to you? Some of you or not, if you've been following my markets that I've been promoting. As you can probably see, these were known as the quote unquote Midwest blue collar rust belt markets. Well, now no more. The above markets lack in inventory due to too many investors buying there. Too many overseas cash buyers. Very smart. These people are very, very smart, or very, very highly intelligent. They know how to follow the money. Those overseas investors, bastards. Anyway, so too much demand and not enough supply in all these Midwest markets. All the homes are selling within 24 hours of being available to purchase. Is that amazing? You snooze, you will lose. You procrastinate, you will regret it. How America has changed from the Sun Belt trophy markets that we have seen in the past to Midwest so-called Rust Belt, so-called blue collar markets. Changes, changes, changes. You have to adapt, you have to adjust. If you don't, you will die. Okay, I digressed. All right, the remaining 42 states is where you will not reach 1% rent to value ratio and minimum capitalization rates. You must understand what I mean by capitalization rates, and I sent over the educational video to you folks in your email from time to time to show you exactly how to calculate that. So this is a true return. So let me educate you once more. It's not that hard. Calculate capitalization rate. Annual gross rent minus annual expenses. Mortgage are never included, ever. Okay, keep that in mind. Divide by purchase price. If it is less than 5% cap rate, you will not cash flow. All right? Or some of you are thinking, oh, if I put more down payment, if I put cash, I will have positive cash flow in California. Crap. The true technical capitalization rate return does not factor into mortgages. I'll say it again. Annual gross rent minus annual expenses divided by the purchase price, and your cap rate needs to be higher than 5%. Any 1% incremental increase on your cap rate will increase your cash flow, net cash flow, significantly. All right? So keep that in mind. The states, the remaining 42 or so states that you will lose your shirt, where your return will be very minimal, if at all, sometimes even negative returns, are, drum roll please, California. That's right. Arizona, Nevada, Washington, Utah, Texas, anywhere in Texas, no more cash flow. North Carolina, Oregon, Colorado, and the list goes on and on and on. I repeat, the remaining 42 states, as just mentioned, for real estate investors are not good to invest. Do not invest in those. Do not buy rental properties in this area. Read my lips. Here's my top 9. The best place to invest: New York State, not New York City, Pennsylvania, Ohio, Michigan, Tennessee, Indiana, Missouri, Illinois, Florida. That's right. Boring places? Yes. You would not want to live there? Possible. But who cares? You have a high performing, long term, stable investment asset. You're buying a asset. You're chasing money. You're chasing wealth. You're chasing cash flow. You're chasing stable market. You're chasing low vacancy rate. You're chasing great property management that will oversee your investments, just like buying stock. You're putting in 15, 20 grand of your money to leverage your property and gaining 15% cap rate and gaining 35% cash on cash return on financing. Think about it. Think about this simple numbers which will make or break your financial future. Hello, wake up and smell the roses. All right. You get my drift, all right? Okay, I need to be a little bit out there, all right? So excuse me if I'm having a little bit of fun on my presentation, all right? All right, top 10 more market highlights, the big picture. Okay, the big picture, the high level. One, rapid, massive US population growth in the past decade. And of course, the bottom line is families are having more children, especially the Latino population and the African Americans and the immigrants coming over from overseas. And overall, people just having more babies. Come on. When those babies grow up to be adult, they need places to rent and lack of new constructions. The construction industry are not keeping up with that massive influx of human beings that are populating the US all over. That's right. You see it everywhere, right? There's no more room to build. Too many people. Massive amount of people. That's why I spend some of my time in Hawaii. Number 3, more people renting than ever before in US history. That's pretty obvious. That means vacancies are very low all over the US. And number 5, continue rising appreciation. Oh, isn't that special? Number 6, good real estate market changing very rapidly. As I mentioned, no more sunshine, no more trophy markets. Midwest, yeah, boring, snowing, cold weather, whatever. That's where you make your money, my friends. Number 7, Midwest markets are dominating the US landscape due to high cash flow and high returns. Need I say any more? I rest my case. Overseas buyers are continuing to buy aggressively in the US. Bastards. Anyway, number 9, more and more investors are buying real estate with their IRAs. And number 10, oh, I kind of screwed up, okay? Vacation homes are booming. People buying vacation homes to rent and to live part time. All right, so that is the gist of my presentation. I hope you receive a lot of value from this video presentation. And What's the next step? Well, the next step is take action. I rest my case. Thank you so much for listening. As you can tell, I feel very energetic, very different. All right. Thank you so much. This is Seewing Yee from the Real Estate Network. Have a nice day. Look forward to help every one of you to achieve massive financial freedom through investing through my network. Thank you. Have a nice day. Bye.